Self-employment offers freedom, flexibility, and the potential for unlimited income, but it also comes with serious tax responsibilities. If you're self-employed, you're not only the boss but also the entire payroll department. Every year, tax laws change, and 2025 brings several important updates that could significantly impact your tax bill if you're working for yourself. Understanding these new rules is crucial to staying compliant and making smart financial decisions. Whether you're a freelancer, consultant, small business owner, or gig economy worker, staying informed will help you plan better and avoid costly mistakes. Here are the top 10 new financial rules to know about self-employment taxes this year. 1. Higher self-employment tax thresholds. One of the biggest changes in 2025 is an increase in the income threshold subject to self-employment taxes. The Social Security wage base has risen, meaning a larger portion of your income is now subject to the 12.4% Social Security tax. For 2025, self-employed individuals must pay Social Security taxes on earnings up to $170,000, up from $160,200 in 2024. This adjustment reflects inflation and could result in higher tax liabilities for higher earners, making it more important than ever to plan your quarterly payments carefully. 2. New deductions for health insurance premiums. Health insurance costs can be a significant burden for the self-employed, but 2025 brings good news. New rules allow for a broader range of health insurance plans, including some short-term health policies to be deductible against your business income. Previously, only ACA-compliant plans qualified. Now, you may deduct the cost of more affordable options, potentially lowering your overall taxable income. Make sure to keep all receipts and ensure your plan is eligible under the new IRS guidelines. 3. Adjusted Qualified Business Income (QBI) deduction limits. The popular Qualified Business Income (QBI) deduction remains available in 2025, but the income limits have been adjusted for inflation. For single filers, the phase-out now begins at $190,000 and is fully phased out by $220,000. For joint filers, the range is $380,000 to $440,000. Understanding where your income falls relative to these limits is critical because the QBI deduction can shave up to 20% off your taxable business income, offering substantial tax savings if you qualify. 4. Stricter 1099-K reporting for online payments. If you receive payments through third-party platforms like PayPal, Venmo, Etsy, or other gig economy apps, new 1099-K reporting rules will affect you. Starting in 2025, platforms must issue a 1099-K for business-related transactions totaling more than $600 per year, down from the previous $20,000 threshold. This dramatically increases the number of people who will receive tax forms for side hustle income. Even small amounts earned on the side must be reported as taxable income, so make sure you track all your earnings carefully throughout the year. 5. Expanded retirement plan options for the self-employed. Retirement planning has become more favorable for self-employed individuals in 2025 with expanded contribution limits for solo 401ks and SEP IRAs. You can now contribute up to $69,000 annually into a solo 401k, plus an additional $7,500 if you are over 50. SEP IRA limits have also been raised proportionally. Taking advantage of these higher contribution limits can dramatically reduce your taxable income while helping you build a solid nest egg for the future. Be sure to calculate the maximum you're eligible to contribute based on your net business income. 6. Tighter scrutiny on business expense deductions. The IRS has announced increased audits focused on self-employed taxpayers' business deductions, particularly meals, travel, and home office claims. In 2025, deductions must meet stricter substantiation requirements, meaning you'll need thorough documentation to justify any business-related expenses. For example, meal receipts must now include detailed notes about the business purpose of the meeting, and home office claims must be based on square footage and exclusive use more precisely than before. Staying organized with expense tracking apps and digital storage for receipts is no longer optional, it's essential. 7. More flexible estimated tax payment options. Previously, self-employed workers were required to pay estimated taxes quarterly based on a rigid schedule. New for 2025, the IRS is allowing greater flexibility, permitting bi-monthly or even monthly estimated tax payments without penalties, provided your payments match your actual earnings. This is especially helpful for freelancers and gig workers with fluctuating income streams. While quarterly payments remain an option, adopting a more frequent payment schedule can help you avoid large lump sum payments and better manage your cash flow throughout the year. 8. Higher standard mileage rate for business driving. For those using their personal vehicle for business purposes, the standard mileage rate has increased to 68 cents per mile in 2025, reflecting rising fuel and maintenance costs. Whether you're visiting clients, picking up supplies, or attending conferences, meticulously tracking your business mileage can lead to substantial deductions. Use mileage tracking apps that automatically log trips, and make sure to record the date, purpose, and distance of each trip to comply with IRS requirements. 9. Changes to the home office deduction calculation. If you work from home, 2025 offers a simplified home office deduction option with updated square footage caps. The new Safe Harbor calculation allows a $6 per square foot deduction up to 400 square feet, a slight increase from the previous 300 square foot cap. This simplified method can be much easier than tracking individual expenses, though it may not yield the maximum deduction possible if you have significant home office-related costs. Evaluate both the simplified and the traditional method to determine which one offers the greatest benefit for your situation. 10. Enhanced penalties for underpayment and late filing. Finally, in 2025, penalties for underpayment of estimated taxes and late filings have increased. The IRS has raised late payment penalties from 0.5% to 1% per month and increased the underpayment penalty interest rate. These harsher penalties emphasize the importance of accurate estimated tax calculations and timely filings. If you anticipate a large tax liability or experience income volatility, work closely with a tax professional to ensure you're making the right payments on time and to avoid unpleasant surprises when tax season arrives. Being self-employed in 2025 means keeping pace with a fast-changing tax landscape. Higher income thresholds, expanded deductions, stricter documentation requirements, and enhanced flexibility in payment schedules all add new complexity to managing your tax obligations. By understanding and adapting to these top 10 new financial rules, you can stay compliant, maximize your deductions, and keep more of what you earn. Tax planning isn't just for the wealthy, it's a powerful tool for any self-employed professional looking to protect their income and achieve long-term financial success. Stay proactive, stay informed, and consider consulting a tax expert to help you navigate these changes and take full advantage of every opportunity available.